What's going on, traders? Hope everybody's having a great weekend. Want to do a quick analysis here for the upcoming week on the E-mini S&P futures as well as the NQ, the NASDAQ 100. If this is your first time to the channel, welcome. Don't forget to subscribe, turn on those notifications, and for all the current subscribers, thank you so much for joining me once again and for the support as always. We're going to start off with the economic calendar, and earnings season really is kicking off now, so we're going to take a look at that calendar as well. Reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, with that out of the way, let's take a look at the earnings. No, let's start off with the economic calendar for this week. It's an action-packed week on all fronts here. So let's take a look at what we've got. Monday, the 27th, nothing going on there. Tuesday, really nothing going on. Consumer confidence, 10 o'clock. But really, everybody's going to be looking at the FOMC rate decision at 2 o'clock. And everybody's really not expecting the Fed here to not really do anything as far as their positioning in regards to the interest rates. So I think it's really going to come down to more what Powell ends up saying in his speech at 2:30. So let's really pay attention to that and see if he indicates any more of a hawkish or dovish tone overall. GDP on the 30th at 8:30. And then we have a little bit of Fed speak. Bowman speaking at 8:30 on Friday the 31st. PCE coming in at 8:30 as well. So that's going to wrap it up for the economic calendar this week. FOMC, obviously the major event that we really want to pay attention to as traders. All right, well, let's get into some earnings here, brought to you by Earnings Hub. And we have SoFi in the morning on the 27th, kind of a cult name there, so people will be watching that. Starbucks after the close on the 28th, maybe a little interesting, a little bit from the consumer discretionary point of view. But all eyes on Wednesday after the bell. Tesla and Microsoft and Meta, Facebook, all reporting Wednesday the 29th after the close. So that will be a big day there. UPS, another good name to keep an eye on from the spending standpoint. MasterCard in the morning as well. But in the afternoon on the 30th, Intel, Visa, and what will Apple report here? And Apple's certainly been having a little bit of a tough time in the technology space as far as its chart is concerned, so that will definitely be interesting. And we don't really have too much on Thursday, the end of the month, the 31st, just a couple of the oil names, Exxon, Chevron, and we have Colgate and a few other smaller names there. But all eyes on Apple Thursday after the close, Tesla, Meta, and Microsoft on Wednesday after the close. Those are going to be top of the line for everybody. So there you go. We have that out of the way. Let's start off with the weekly chart here on the E-mini S&P futures, as we always do, a blank chart and just see kind of where we are. And we were kind of talking about that weekly 20-period moving average. It's been a godsend here for the markets overall. Every time it seemed like the market was coming to hell in a handbasket, it has held true. We never closed that week underneath the 20, ended up pushing up higher and really retaining that bullish structure. Our Momo here has cooled off a bit, so and starting to perk back up, so it's indicating here we're not overbought anymore. So a little bit of room now to be reset as far as that front is concerned. And really, what's going on here, right? So possible inverted head and shoulders, broken over that neckline, and really from the weekly high from the 6th, right? It's going to be 60.71. Well, actually, if you want to get granular, it's going to be 68. Or I'm going to call it 70. But from there to, I could even say the weekly open of the 30th. Right, now we've had our shift in market structure. So for me, now from the weekly view, as long as we hold 60-30, I don't really have an issue, right? Anything pulling back here almost could be a cup and handle at that point, right? It seems to me that if we break over, and we came up almost making equal highs here, 61, 65, thereabouts in the low 60s. I think if we push up over that, from the weekly perspective, it would be, 200 as a given. But I mean, why wouldn't we go to 6,300? Right? But we can still afford, this. Maybe we get trapped again, but we can still afford a pullback into that range. Ideally, from the weekly view, 60-70 holds. Just look at that weekly high from the 6th. I think that's a good benchmark there. We get the lows from the week of the 2nd, right? So this is pretty much what we're looking at. Reset here on the weekly Momo. So we're free and clear here. We could, of course, now we saw a big move over the last 2 weeks. There is certainly that potentiality of some sideways consolidation, building up momentum, type of a bull flag, and then potentially making that next move up higher. Now, of course, if we start breaking underneath and start seeing some daily closes or even a weekly close under 60-30, I think then we can start to sing a little bit of a different song and potentially talk about, retesting down in the lower part of 2 weeks ago, the week of the 13th range, down in the 58s, 80s, 90s. So that's possible as well. But as far as it stands, this area here, has held true for the bulls. So let's go into the daily chart here, and we're going to pull up the other chart we've been working with. Now, I will say from this view, we're not overbought. So we're good as far as this front's concerned. We got a reading of 9.3 as it stands, so that's not bad. Okay, but the distance here between the price action and where the 20 is in the 9, a little bit extended. Right? And now we've come back into this previous balance. Right? And this is exactly what the bulls needed to do. Right? We talked in the last video that was public that if we started trading in this area, this is a bullish neutral stance at this point. And we now have done everything that the bulls have needed to do. There could have been some issues here at the 61.10 area. We did not have that. The highs from the 26th of December could have double topped there, did not. Okay. Really didn't even see any consolidation. Now, a lot of this had to do, of course, with the election, Trump getting into office here. So high congestion zone here with the balance. Is it also not reasonable to consider this? We've got earnings this week and FOMC, so it's a little tricky. Really, I would say take the technical analysis at this point with all the economic data and earnings. You really got to take it with a grain of salt. But we have our levels, right? Things could be looking great. They retrace quite a bit on some bad earnings. hawkish stance, whatever, at least we'll know maybe our specific potential entry areas. All right, the 60-60 area is interesting to me. Retracing down into the 9, putting in a daily higher low. Any of these areas. Now, ideally, we want to see 61.10 hold, but it can come down to 61 or 60.80, 60.85, still higher low on the daily, and even down to 58 or 60.60 basically, still a higher low. Under that, now I'm going to have a little bit of more of an issue. But for me, I'm still good up into any of those. But that's me. All right, coming down here, we get more in that bullish neutral stance, and we'll have to see, because then it's anybody's ball game. Right, so I would say caution under, from the daily view, under 60-60 gives a little bit of caution. We do have the daily 9 sitting right at 60-31, 60-30. So, we could end up just stopping right there. And this should, the 20 should start to creep a little bit up as well. Maybe we see the 9 start to flatten. Because I really wouldn't be shocked to see ahead of, the next 2 days, to see this ahead of FOMC and some big earnings. Right? So be tactful. You're not going to get a trend day, quicker entries and exits, in my opinion. Take what you can get and get out. A lot of trappy type of price action. Very, big potential for that. Okay. So that's all I've got for the daily chart. Let's move into some day trading levels and see what we can take away from that point of view. Let me extend some of these on the fly. Thank you. Okay. So we close basically on the hourly VPOC right here. Just, were we a little bit below? No, basically right on it, 1 point above. Right, but underneath the hourly 9 and 20. So a little bit of shift here potentially in the hourly momentum. I would say for me, the bulls probably got to get back over 61.50 for me to feel a little bit better about attacking the highs at that 61.60. Getting over that bring us up to 61.80. Okay. But value area high 61.61 here on the volume profile. A low volume node here at the 6100. Not a lot of trading taking place here. Not a lot of participation. So I would say that under 6110, 6115 opens the door to fill out some of this imbalance, this volume imbalance here, the lower volume node. I think could be very possible. Come down about 15 points to the 6100 would not surprise me at all. Right there. Under that, under 6100, 60.87, I think would be a next level downside. Under that, watch the highs here. Could very well stop at 60.77. But if the sell is strong, 60.65 down to 60.55, I think is a bit fair. Right, so we've got some upside levels, some downside areas. Right now, of course, that doesn't go with saying we can come down to that 61.15 and bounce for sure. And of course, we can come down to that 6100. I mean, I feel like you kind of gotta see about some type of counter trend move there. I mean, even from 6100 to 6115, it's still 15 points on ES. It's still a good intraday trade. Get out from here, maybe even think about going short, and then just taking it both ways for 15 points up and down. Now, of course, it could break over, right? But if that's the case, you just wait for the retest, and then you go long and look for basically another 15 points, 61.15 to retest that VPOC at 61.30. So, a couple ways you can play it there. Either way, it's very possible you trade between the 15 and the 48. I mean, that's kind of wide for where VIX is now. But we can just trade like that as well, especially with everything I mentioned in the data. So be careful of that. I'm probably going to say that 10 times during this video just to keep you guys hopefully out of trouble and not over trading ahead of such big data. All right, let's get into NQ here. Take a look at the NASDAQ. Come into a blank chart. And we'll open up our weekly. This is not the one I wanted. All right. All right, so a little bit of that divergence certainly in the market. You can see that when we were looking at the ES, we almost were basically matching the all-time highs once again. Not so much here on the NQ. 20 still holding, so that is true. Push down here to the 9, weekly 9. Still a bit hot on the Hello Momo here, getting a reading of 8.65. So a little spicy here. And for me, really, you know, possible inverted head and shoulders. I kind of hate those at the top of a trend or near the highs of a trend. But for me, I can't look at this any other way, really, than there being supply, basically, in this area. You know, we have trapped inventory more than likely here on this wick. Okay, so trap late longs. And from the weekly perspective, you gotta see over 22,110 for me, right? We gotta breach those equal highs. The weekly high from the 23rd, 22,111. Okay. So that's what I've got to see. Big zone in there, without a doubt. Just look at the weekly highs here from the 6th and the 9th of December. Right around 21,900. Yeah, 21,900. I think that's a pivot. We closed 21,907. Okay, so we closed right on the high from the weekly high of the December 9th. If we can see the market up over that and really accept, I think we'd be building up the pressure to go ahead and test that 22,110. And then if we can get over, we would then match or look to match that equal high. Right? That would be my guess from the weekly view. This would let me edit this. Oh boy. All right, it's fine. There we go. So over 22, 110. Look, it could be on a weekly point of view about 400 points higher. Watch out for consolidation. Underneath 21, I'm going to say 920. Give it a little bit of room for a pivot. Under can be down to 21, 760. Get the weekly high from the 30th. But over 21, 920 can be looking to attack that upper part of this range. Balance at 21. The high, of course, at the 21, 110. Or excuse me, 22, 110 area. So that's what I'm looking there from this point of view. All right, let's get into the daily chart. And we're going to pull up one of the charts that we have been working with. Certainly make a case for a little bit of a bull flag here. Not overbought on the daily. Flag and go. Maybe. 2-day balance right now. Almost 3-day balance. More or less. So, even from this view, you could say, we start getting under 21,850. Yeah, of course there can be intraday trades, but that's the bigger short may open up, under that, under the lows of the balance that we are currently have created. We sell down, have a date with the 9 once again. And I'm sure as we consolidate, we talked about the distance here a little bit between the 20 and the 9. It is a little bit far. I'm not too comfortable with that. The consolidation also would give some time for the 9 and the 20 to catch up. And if we did see a sell reaction, it might be just there to catch us for a bid. Whoops. It might just be there to catch us for a bid as they catch up, right? So that's another possibility. Right now, the 9 sitting at 21,680, and the 20's at 21, about 100 points away, 580. So 100 points there, difference. Watch these start to drift a little bit and flatten like so, maybe giving us a bit of a trampoline cushion if we do get a bad earnings reaction, right? So still looking good here. We're at the double top, whereas again, ES had broken that equal high and Q has not, right? Still that potentiality for the pattern traders. Maybe this needs to pull in to create a firmer right shoulder. But for me, if we start getting, we're in a mostly bullish stance here. But if we fall back below and start trading here, it's a little bit of more of a bullish to neutral bullish stance. Okay, we start getting under 21,450, 60 area. Okay, then it's a bearish to neutral, right? We start trading in this area, bearish to neutral. 21,300s, 313. Bearish, neutral bearish, neutral bullish, mostly bullish if we stay here in this balance, right? And either the plays are up and over the 22, 10, or under 21, 895. Gotta pay attention to that 9, that daily 9 and 20, and see how they, because like I said, we might not make it all the way down to the 21 640 area, right? These may catch up here. All right, so I think that's everything from the daily perspective that I wanted to go over. Let's take a look at some day trading levels for this week and see what we can take away from those. Well, we're still in kind of the same zones as we've been in. So now I added a couple of levels here. Oh, this is a 4-hour chart. Let's go into a 5-hour, 5-day hourly. I think this is really illustrating our balance right now that we've been, whoops, come on, that we've been trading in. As you can see, it's mostly range bound. So if you are not good at range trading, then I would suggest just to stay away or to be a little bit careful, because it can be a little bit more complicated and tricky with not a lot of follow through. Of course, we did have a good down move here on Friday, but either way, the range right now balance pretty much 21 860, 865 the low, up to about 2280, 2270s. Right, so those are our highs, lows. You can just wait to play the extremes, of course. Be careful here because you can get chopped up, but basically diddling, quote unquote, in the middle. But what you could also do, you find another blank chart, right? Create our balance, right? And we've got our highs, whoops, our premium lows as those discounts, and you can see here the sweeps of generating liquidity, and we've got our EQ, right? So you could look at it this way: under say 21.8 and 21.975, looking to attack more of that lower part of balance above upper part of balance, right? Hourly 20, hourly 9 facing down. I mean, at this face value look, it looks like, as long as we trade like so, pretty much, it's just setting up in a potential bear flag to dump. Where could it dump? Well, what about the highs from back here? Right, so maybe we could say under 21.850, look for potential sells down 21.77, 75, right? Very possible. And another way to look at the market. Boom, right there, right? Start getting over. I think, of course, that 900's been a big area on the certainly at the late of the day Friday. So, but it can give you about 70 points up. If we do get that retracement, could reject, head back down. But there you have it. I think this is a good framework, or a framework I would use personally, below VPOC at the time. Okay, let's get back into the levels I have here. A little bit more than normal, but I'm just kind of looking at these zones. Right, almost had a balance within a balance here. Right. This is a sweep down. Okay. So, I mean, unless bulls get over 21.970, it's going to be a tough time. That's only when, if they're trading up here, they start to negate the trend, the hourly trend. And they can come in and test, 22,000. And that only gives you, 40, 50 points. That's decent, but be careful there because you got that VPOC. We're at this area, shift in market structure. Basically right at that 22,010. So for me, I'm going to be a little bit more short biased as long as we stay under 21,980 or even 22,000 basically, but 22,980 still short biased. Certainly under 22,920 or 21,920. Short biased 21,980 still. Yep. But here it looks like a bear flag. But really, as I mentioned, got to get under 21,860 for more downside. Could take you into the highs here around the 21,760s. Maybe we get down to 21,725, 2030 area. So, we still have some area here where it could stop a little bit ahead. But I would say anywhere in this area is possible for a downside target if, in fact, we can break those lows. 845. So, but if we get over that 21,890, 22,000, 22,010, over that, attacking the high of the range, 22,850, 845, and then back to 22,870, 880 for a third test up here. All right. Okay, perfect. That's all I've got for NQ. Let's take a look at some of our other charts. Let's start off with the 10-year, what's going on with the yield curve, and we'll look at the one-day VIX here. Yield curve still reinverting, moving up. Have to pay attention to this. No one's talking about it really anymore, but this is still re-steepening after being inverted. Recession. Well, we'll see. It's getting a little spicy here. So we got a reading of almost 12 to the positive side. So I think it's possible that it cools off maybe a little bit. One-day VIX down to 9. Volatility recently being suppressed. Not in a comfort zone, so that's fine. Okay, so SPX A50R. How many stocks in the S&P 500 are trading over their 50-period moving average? Well, we're almost over that 50% marker. That looks good. I like to see that for the bullish stance, but be careful. This could just end up rolling over and heading back down. Still overall potential downtrend. So not quite out of the woods, but looking much more constructive. We were warning about being short as the SPX A200R came into that 50% marking. Big bounce there, saving us. But now we are coming back, kind of retesting this balance low here. We were talking about that in a previous video around the 60% marker. Watch out that this does not reject as well. So much volatility this week, it is really hard to say for any of these metrics, but we will go over them. New highs versus new lows. Over the zero line, that is good. That is constructive. Is it convincingly over the zero line? It's at 91. Not really, but it's fine. At least we're over zero, so that is good. Let's look at the junk bonds here. Breaking over the downtrend, moving up higher, but in a big spot around that 80. Let's see how this reacts, because this very well may roll over. But no divergence. So that is good. What are the bonds doing? Okay, 7-year BRB looking good. This kind of curling down. Still over the 50, but, you know, this might still cool off a little bit. Head down. Give some time for the 50 to catch up. It cools off. And then back up in its normal direction. So watch out there. Could see a little bit more downside in TNX, which is good for the markets. TLT could potentially continue to move higher as well after it was extremely overbought, oversold, and finally catching a little bit of a bid. Here we are. Let's get into that one. Hit the low, coming up. Let's hold 86. I'm going to give it 86.80. You know, everything's looking good here. It just looks like it made a higher high and it's just setting in its first daily higher low. See if we can get up to 88.42. That's going to be the big area. Over that, we can see some more upside, maybe into 89.77, but certainly could get stuffed here at 88.42, so 88.45. So watch out for that. Could be a little bit of an inverted head and shoulders for the pattern traders. Very possible. Neckline pretty much in this zone, so we'll see. Looks constructive to me. I think we can see a little bit more upside in the bonds. Let's see. We do have a bit of a divergence here within the Dow and the transports. I'm not a fan of that. Dow not at all-time highs, but certainly up there. A little bit of a worry spot here around the 44,500 basically. I guess that high made it a little bit higher. I mean, it was a little bit higher. Yeah, 44.85 or 44,585. So we can say 44,600, a little bit of an area, but let's see, this could just come sideways, but divergence for sure. You can see this, the transports are not even close. So that is a little bit of a bearish signal. Posted about this head and shoulders pattern on the dollar. Finally cooling off. Everything's playing out pretty nicely to our levels here, with the retrace back up into 109 30s 40s, bringing it down, breaking 107.73, stopping at our 107 30s here. As long as the dollar stays underneath 108.50, no reason for me really to be overly bullish. It can bounce. We could see counter trends like this, but this could just end up happening. It's just setting in another right swing high, lower high here. That can be end up being the path. We start seeing the dollar back over 108.50, 55, and start seeing it trade in this area like so. Okay, that would be a little bit of a different scenario, and we'd probably go into more of a neutral to bullish neutral stance. But as it stands, bearish stance here, as long as we stay under that 109.850. So Any retracements still are shortable up until there, is in my opinion. Ultimately, targeting under 107 can come down to 107.30 can come down to 106, 106.80s would be my guess. All right, so gonna look at the TNX now. The yields, okay, getting a little bit constructive here. Up top, we have very similar look to the dollar, sweeping the high, coming back under. As long as we stay under the April 24th high, under 48.3, under 47, 4.7, we are good for a daily lower high to be putting in. And we ultimately, I think, could see back at 45, 448, that area, which would tell me that bigger bounce in the TLT as well. We talked about that inverted head and shoulders in the TLT. Well, what would this create here? Well, then we've kind of got our head and shoulders being created, right? Under 45, that's the big pivot. So under 44.80, under 45, 44.80. Could look for lower on the yields down to maybe 43.50, 43.60 area. So that would, again, ease pressure on the markets. Take it with a grain of salt. Again, we've got earnings and FOMC. VIX being compressed here. Couldn't really sustain over the 20s. 22 was really the high, breaking underneath our 19. Came back down into our 1575, sitting around 15 as it stands. Pretty much looks like a bear flag on the daily to me. So as long as we stay under 1575, look for continued volatility compression. I don't know how much I believe it with the FOMC and all these earnings coming in, but we shall see. Nothing on the put to call ratio here that is standing out to me overall. Let's look at the VIX futures and the VVIX and the monthly over the 9. Contango here, nothing issue, no issue here on any of these fronts. Volatility of the volatility still hanging out over 100, so a little bit more true than what VIX is telling me here on the VVIX. Certainly can still be looked at as a potential bear flag type of scenario, but as long as we're over 100, over 96, I think there's that chance. Got to get over 105, 103 pivot. We've been over that. That can give us, more increased volatility, but potential to be suppressed, but kind of hanging in here in a balance zone. So we'll see. It's either the volatility is going to explode or get crushed. Hopefully it goes up just because that's better for intraday traders. But nothing bearish here overall, really giving us any signal. I will say the skew here, I was taking a look at this. The VIX does at the money options. The skew is volatility on the out the money options. This is still pricing in higher volatility, making all new highs. People are hedging. Still a little bit nervous here. So I think that that's interesting. And the inverted ZT giving us a look at the 2-year, basically. Not moving up, kind of saying that hikes probably not really in the forecast. I'll be watching this. If it starts to get up and over, well, that 102 area negative, maybe that would not be the best sign, and we could be looking at some more hikes, but for now, nothing. Skew saying possible volatility still in the works. And I think that's it. Okay, perfect. Well, that's all I've got for this week's video. I hope you've all enjoyed it. Again, if this is your first time to the channel, thank you for joining. Don't forget to subscribe and turn on that notification bell if you have enjoyed it. Let's get over that 2,000 marker I really appreciate it. I do this for you guys for free. So the least you could do, hit that subscribe button. You know you want to. Either way, I appreciate the time that you have spent with me. Appreciate everybody that interacts with me on Twitter, on here. It means the world to me. And you know how we close out every meeting. Remember, a prepared trader is a profitable trader. So let's plan our trades. Let's trade our plan. Wishing everybody a great week. Be cautious. Again, be cautious. Potential chop coming into FOMC and the earnings. Be careful. I hope you all have a great week. Take care, and I will see you out there. Happy trading.